Let's talk about the stock of KCB. KCB Group delivered another strong year for shareholders in its most recent financial reports. And I'm saying so because in 2025, KCB Group reported 68.4 billion Kenya shillings in net profit. That was an increase of 11% compared to 2024, where its net profit was 61.5 billion Kenya shillings. But the more interesting story is what happened to KCB's share price. And I'm saying so because KCB really saw its share appreciate at the Nairobi Securities Exchange. For example, right now, the stock of KCB is going at 89 shillings and 50 cents per share. That's the price at the Nairobi Securities Exchange. Looking at one day change, the price increased by 0.85% in one day. Then over 5 days, the share did increase by 5.29%. And in 1 month's time, KCB share has appreciated by 10.84%. Then year to date, simply put, in that 2026, the share of KCB at the NSE has appreciated by 36.12%. And then over the past 1 year, the share of KCB at the NSE has appreciated by 68.87%. And the most interesting statistic is that all time the share of KCB is up 2,910%. Simply put, over the past about 30 years, the stock of KCB has appreciated by almost 30 times in price. That's how amazing it is, okay? And so, the 89 shillings and 50 cents price also represents KCB's all-time high. I'm pretty sure even right now, the stock of KCB has increased further and even probably surpassed 90 shillings per share. And in case you didn't know, KCB is now Kenya's largest company and bank by total assets, because its total assets are approximately 2.3 trillion Kenya shillings. Therefore, is KCB a good bank? And even so, given its stock has already rallied almost 69% over the past 1 year, is KCB still a good stock to buy at the current price? Or even so, the current price reflects all the positives relating to KCB. Let's talk about all that in this video. In case you are new here, my name is Afagza Sifuna. I am a finance expert and qualified accountant, bringing you amazing videos about investing and making money each and every day. In case those are kind of topics which you like, down there is a button called subscribe. Consider subscribing to this channel. Don't just watch this amazing video and leave. Consider subscribing for you to help the channel to grow and for you to get these amazing videos each and every day. And while you still at it, drop a like on this video. And by the way, some of you reached out asking if I can support them in their investment journey. Of course, I can. Down there is my WhatsApp number. Reach out to me. Let's have a brief introductory call. I understand how you are going about investing and even so appreciate your investment journey. And then we're going to agree on how best I can be able to support you to be able to make more informed decisions as you go about investing. And as always, down in the comment section, I've also attached links to additional resources which you can purchase for you to be able to level up when it comes to investing. Having said that, let's look at KCB company profile. Of course, KCB is listed at the NSE, right? And the larger group oversees KCB Kenya Limited and regional subsidiaries, as well as businesses including KCB Investment Bank, KCB Asset Management, and also KCB Bank Assurance. The group operates across East Africa, with Kenya being its largest market because KCB Bank Kenya accounts for slightly upwards of 70% of KCB's revenue. And looking at the key numbers, total asset, as I've said, is 2.3 trillion Kenya shillings, making KCB the largest company in Kenya by asset base. And then its net loans are 1.2 trillion Kenya shillings. Customer deposits are 1.7 trillion Kenya shillings. and KCB has approximately 39 million customers, and total branches it has are almost 460 branches. Looking at the history of KCB, KCB began in 1896. Its origins were 1896 when a branch of the National Bank of India was opened in Mombasa, Kenya. And then in 1970, the government of Kenya acquired control of the bank and it became Kenya Commercial Bank. And then in 1988, KCB was listed at the Nairobi Securities Exchange through an IPO. So when you buy KCB today, you are buying into a business with more than a century of operating history, quite a rich history. So in this video, what are we going to be analyzing, right? We are going to be analyzing KCB Group Public Limited Company. It's not just simply KCB Bank Kenya, because I'm going to be looking at the statements which the group released relating to its financials and then compare the different years, 2025, 2024, and if need be, on some of the matrices, I'm going to compare 2023. When you look at the current ownership of KCB, who owns KCB? KCB has a mix of ownership, and the government of Kenya owns 19.76% of KCB. National Social Security Fund, or NSSF, owns 10.20% of KCB. And then local institutional investors own the majority, because local institutional investors own 46.93% of KCB. And then local individual investors own 24.43% of KCB. And then foreign investors own 8.88% of KCB. One interesting point here is that local investors collectively dominate KCB's share register, whether it is a mix of individual or even institutional, okay? So, in case you want to jump onto KCB stock, what is KCB's investment thesis? Simply, what will you be buying into? The very first thing is earnings growth. And this is so because KCB continues to grow its profits and is shown that in its financial statements. The second thing is high profitability. And I'm saying so because, to give you an example, financial year 2025, the return on equity for KCB was 22.5%, which is quite a commendable return on equity, showing that it has high profitability. And then the third thing you're going to be buying into is dividend income. And this is so because KCB has rapidly increased its dividends after temporarily suspending in 2023. It's really ramped up, as you're going to see in this video. And then the fourth thing you're going to be buying into is regional diversification. And I'm saying so because nearly 30% of the group's earnings now come from subsidiaries outside KCB Bank Kenya Limited. And then the fifth thing you're going to be buying into is potential valuation upside, as you're going to see in this video when I'm going to be talking about valuation of KCB stock. Having said that, how has KCB performed? Now let's look at financial performance of KCB. The summary of it is that KCB is getting bigger and its numbers are looking more and more exciting. Looking at the financial 2025 numbers, net profit was 68.4 billion Kenya shillings. Net loans growth was 16.3%. Yes, loans grew by 16.3%, right? The net loans, okay? Deposit growth was 15.2%, which is also commendable. And then return on equity was 22.5%, which indicates high profitability. And then cost to income ratio was 42.3%, which, by the way, is very commendable because it shows that KCB Group utilizes less amount of money for them to be able to generate revenues, because ideally cost to income ratio typically in banking sector needs to be below 50%, and KCB Group's is 42.3%. And then non-performing loan ratio is 16.9%. This is where KCB has an issue, and you're going to talk about that in this video. And then cost of risk is 2.8%. Therefore, the loan book of KCB grew significantly, which is a very good thing, and also deposits did expand. This is important because for a bank, sustainable growth ultimately comes down to ability to attract deposits and deploy those deposits profitably through loans. But of course, as I've mentioned, we have an issue on some of these matrices, and we're going to talk about them also in details. Now, let's look at financial quality. How is the financial quality of KCB? Is KCB growing profitably? Looking at the ROE, or return on equity, ROE of 22.5% is very commendable because it means KCB generated a return of approximately 22 shillings and 50 cents for each 100 shillings that shareholders gave KCB through shareholders' equity. That, guys, is a strong number, okay? And then looking at cost to income ratio, as I've said, is 42.3%, which basically means roughly 42 shillings of every 100 shillings of operating income went towards operating costs, which is also within an ideal range. So no cause for alarm on that end. And then the net interest margin was 7.7%. This shows the spread KCB is generating from its interest earning assets after funding costs. However, management expects the net interest margin to moderate slightly to the range of 7.2 to 7.6 in 2026, partly because of lower interest rates. Because we all appreciate the interest rates in the country were changed. The regime which dictates interest rate was revised sometime earlier in the year, and of course, enforcement came to be. Therefore, on financial quality, just like looking at financial performance, growth is very strong. Financial quality is very strong too. Then let's now look at the biggest problem which KCB has, which is asset quality. And I'm saying so because KCB has been aggressively working through its legacy NPL books, right? And of course, when you look at the NPL for last year, the ratio was still high. It was 16.9%, which is extremely high for non-performing loans because the ideal standard should be aiming to hit less than 3%. But then for KCB, it was 16.9%, also just indicating the dynamics in the economy. People are having a challenge when it comes to paying loans. Businesses are having a challenge when it comes to paying loans, and therefore this percentage reflects also dynamics in the economy. KCB has been aggressively, of course, working through the NPL book, with management targeting a reduction to about 14 to 16% during 2026. So management knows this and they are working very hard to reduce its NPL. And then when you look at the NPL cover, right? Because it's very important when it comes to impaired loans. Looking at the NPL cover ratio was approximately 122% in financial year 2025. And then just the first quarter of 2026, the NPL was 127% when it comes to NPL cover. And this is very important because it means KCB's impaired loans were substantially covered by provisions and collaterals. Simply put, the risk on impaired loans was substantially reduced. We all appreciate that NPL ratio is KCB's weakness, but the coverage provides an important layer of protection. Now, let's look at some other interesting dynamic, right? Dividends. How has KCB performed when it comes to dividends? KCB's dividend story is very interesting because a few years back, there was an interruption, but right now, KCB has paid dividend consistently over the past 2 years. And I'm saying so because in 2023, KCB's dividend was 0 shillings. No dividend was declared as KCB prioritized capital preservation. And then in 2024, KCB paid dividend of 3 shillings per share. And then 2025, KCB paid dividend of 7 shillings per share in total dividend. KCB therefore increased its total dividend from 3 shillings to 7 shillings in 1 year. That is a 133% increase in dividends, which of course is very, very exciting, right? And then looking at the KCB 2025 financials, it did distribute dividends amounting to 22.5 billion Kenya shillings. And the interesting thing is that the company has a stated dividend policy which allows for distribution of up to 50% of earnings while maintaining an adequate capital for growth. KCB's dividend story is exciting, but you as an investor out there, don't assume just because last year KCB paid a dividend of 7 shilling per share in total dividends, don't assume it's going to repeat the same thing this year. And that's so because dividends are not guaranteed. Notwithstanding, KCB's dividends for last year were extremely strong. Then, looking at valuation of KCB, right? How has KCB fared on when it comes to valuation? Across the different matrices, KCB has performed pretty well. And I'm saying so because looking at the PE ratio, right? Starting with the PE ratio, looking at the current share price of 89 shillings and 50 cents, and then looking at the 2025 financials, where net profit was 68.4 billion Kenyan shillings across approximately 3.313 billion shares, implied that the EPS of KCB was 21 shillings and 29 cents. Therefore, the PE ratio is approximately 4.2 times. And then, looking at KCB's PB ratio or price to book ratio, using the book value of approximately 109.61 Kenya shillings and the current share price going at 89 shillings and 50 cents, KCB's PB ratio is 0.82 times, right? So the market is valuing KCB at less than its accounting book value. This is an interesting valuation, and I'm saying so because when you look at it, the market is slightly undervaluing KCB when it comes to its PB ratio, and it seems to also undervalue KCB when it comes to its PE ratio. This is an interesting valuation signal for a bank which is generating a return on equity upwards of 20%. And then, when we look at the dividend yield, using financial 2025 numbers, it gives us a dividend yield of 7.8% in trailing dividend yield, which also speaks in favor of KCB because the dividend yield did do very well across even the Kenyan banks, because most of the banks actually had a lower dividend yield than KCB except NCBA Bank. Having said that, we can see that the market has slightly undervalued KCB on some of those valuation matrices. But then again, that doesn't make the stock of KCB a cheap stock because the bank is doing very well across different facets out there, and it has an exciting value proposition for investors. Talking about that, what are the future growth catalysts for KCB? Among the future growth catalysts for KCB are, at number one, asset quality improvement. Simply put, can KCB improve its NPL? Okay. Number two is continued growth in the region. We've all appreciated that the KCB has regional presence and even is getting 30% of its revenues from other subsidiaries beyond Kenya. So, can it continue growing in the region? And of course, all indicators show it's bound to continue growing. And then, the third catalyst for KCB is digital and non-funded income. And I'm saying so because KCB expects non-funded income to become increasingly important when it comes to its numbers. And then number four is continued loan growth. Management's 2026 guidance is for approximately 10 to 11% loan growth. That is below the 16% achieved in 2025, but still within a healthy range, appreciating the dynamics when it comes to the loan regime in the country. And then when you look at risks, which risks is KCB exposed to, or even so, what could derail KCB? At number one on the risks is asset quality. Still, guys, the NPL is very high. Hopefully, KCB is going to bring that down. And then number two is lower interest rates. And I'm saying so because falling rates could put pressure on net interest margins. And we've seen this year the interest rates have fallen. And then number three, valuation re-rating. And I'm saying so because the stock has already appreciated 68.87% in 1 year, okay? The market is increasingly recognizing KCB's growth. Therefore, valuation re-rating could be a risk. And then number four risk is regional exposure. And I'm saying so because regional diversification is positive, but then again, exposure to multiple currencies, economies, and regulatory environments is something also which KCB needs to manage. And then number five is dividends normalization. I'm saying so because investors should not assume that The exceptional 7 shillings per share, which was paid last year, is bound to continue. There was a special dividend in there. Let's hope KCB is going to pay a decent dividend. But then again, this is a real risk in case investors out there expect the same dividend or even higher dividend. Having said all that, what is my verdict? When it comes to the KCB stock, my verdict is that yes, I'm going to buy at the price of 89 shillings and 50 cents. But then again, I won't buy that aggressively. And the reasons for why I'm going to buy is because some things are compelling to me. Among them, number one is KCB's high profitability. An ROE of 22.5% is a very strong ROE. And then number two is that earnings are growing. Financial 2025 profits reached 68.4 billion, up by 11%. Okay. And then the third compelling reason for me is the balance sheet is enormous. I'm saying so because KCB's total assets are 2.3 trillion Kenya shillings, which is quite an insane amount if you think about it. And then number four reason is that dividends have returned to be strong. KCB transiting from zero dividend in 2023, then right now having the most recent dividend being 7 shillings per share in total is something significant. And then number five, I'm going to buy because the valuation is still reasonable. At 89 shillings and 50 cents per share, the stock is trading at roughly 4.2 times the earnings and 0.82 times book value, which of course is reasonable and also a good signal for entry. And of course, number six, other compelling reason which also is gonna make me buy the stock of KCB is because there is still an asset quality opportunity whereby KCB can even further improve its NPL, therefore making its stock and business more enticing. What will you do? Will you buy the stock of KCB, or even so, what will be your approach? Comment down there in the comment section. Let's continue discussing. Cheers guys, and you all stay safe.